The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, folks. We're going to start out our day like we usually do with the German DAX index, and then we're going to switch over to the precious metals because there's something's not right in Denmark or Sweden or wherever it is. Anyway, we're going to take a look at that. This market is, let's do the DAX first so I don't get too confused. Walking and chewing gum is not my strong suit. As you can see with this DAX on the daily chart, we have made some type of a possible daily top. And if you look at it on the 15-minute chart over the last 8 days, we've been pretty much in the same range. Very, very tight range, much like we've done here in our market, except that it keeps going higher and higher. Remember, in the Dow, folks, this last 1,000 points in the Dow has been 550 points of it have been three stocks: Goldman Sachs, Goldman Sachs and Boeing, and I can't remember the third one, but there was basically three stocks, high price one, 3M, that were basically pushing this thing up. But that still goes higher, so that doesn't make any difference. But let's get to what I really think is important here. I want you to see this silver chart, because one of the premises that we deal with pattern recognition is that the markets repeat, over and over again. And as you can see here, on the bottom that we made here on October the 7th, last Friday, that was a perfect 61% retracement on the long-term weekly that we've already discussed. You'll notice the market rallied from 1635 all the way up to 17, and then it went sideways for 10 cents, doing nothing. And look what it's doing now. It's doing exactly the same thing. Folks, these things are not backing off, both gold and silver. That is not a bearish sign. I mean, that to me is there's a high-level consolidation up here. Now, if we get silver below 17, then that's certainly wrong. But right now, that's what it looks like. We can't even back off more than $7 in gold after a $34 run, and we would expect it to at least drop to $12, which would be the 382. So this is setting up, for a very potentially bullish scenario here in both gold and silver. So sort of pay attention to it. The $64 question that's just been asked is, do you buy this breakout? Well, you certainly can, and the way to do that is the high in the silver was 1730. If we get above 1730, you can buy it, but if it gets back below 1710, it's a false breakout, so you have to risk that 20 cents. The last time that it broke out, it rallied 40 cents, so you got a 2-to-1 risk-reward ratio right there in your favor, and you certainly have to say that you're trading with the short-term trend, because since October the 7th, it's moved $5,000. That's more than what gold has moved. Gold's only moved 3,400 since the bottom. So silver's acting pretty bullish. That's the way it looks like from the cheap seats. So anyway, keep an eye on it. It looks very, very interesting, from a short-term trading standpoint. Now, tomorrow we're going to have the crop report out, and I'm going to have either Rich Anderson on from Anderson Capital Management or Simon Lee from Sylvia's Financial to talk to us a little bit about what they're expecting. The whole world is expecting a neutral to bearish report, and the market is setting up for what I think is a potential bullish surprise. And there you go, is the key word there, is potential. Let's just take a quick look. We've looked at this before, and we'll look at it again, of course, is we want to watch this wheat market because it's got some really great characteristics. If we look at first the Minneapolis wheat, let's just get this up so we can see it. This is the one that started the huge rally, and then we gave it all back in Chicago. But the Minneapolis wheat has stopped at the 78% level with a really nice 3 drive to a bottom pattern. So there's a lot of support at around 608 in the Minneapolis wheat, and we'll see if that's going to be any good support after the report comes out tomorrow. But I believe the report is mainly well, that's a supply-demand report, so that'll have everything involved in that. So you'll just keep in mind that it'll be quite interesting. Let's just take a look here at Christmas wheat here, December wheat, because this is the one that has the clearest pattern coming into the report. As you can see here, we have a lot of support here at the 430 per bushel area. We're trading around 433 right now. That's a 3-drive pattern, spot on at the 78.6 level. So that's another one. If you look at patterns, that's something that you might want to keep in mind, because it certainly has all the characteristics of a pattern that you like to see. And that's what the whole premise is to see if these things are going to fulfill, the bottom level here. And then you have a really good, interesting part about it. Now, hold on one second here. There's a couple things that are going on. 1 second, please. There are several things that are going on in the futures markets today that are very interesting. In the cattle market, we're reaching some very, very interesting levels in cattle for a potential sale. And we'll bring this up here to take a look at it here. This is one that we've been watching closely, because Rich Anderson, of course, back in August when we were having the solar eclipse, we had that beautiful ABCD 3-drive pattern with a butterfly coming in right at that 107 level. We were fortunate enough to buy that, and we took quite a bit out of that, which is good. And now we're coming up. You'll see here where point D is about a penny higher, and it's going to be right at a 78% level. So this is going to be a real test here of the technical capability of December cattle. Now, the feeder cattle, the baby cows, they're running a lot slower. They haven't even taken out the 61% retracement of the September high yet. So the feeder cattle are acting a lot less bullish than we're seeing here in the December cattle. But we'll follow this over the next few days, especially after the crop report on Thursday. We'll do quite a bit on Friday about what it's doing and what we're looking at, because this supply-demand report is going to be this October one is a big one. So it's going to be interesting to see that the basically of what we're watching. So that's pretty much it. I just noticed that the CEO of BlackRock, the largest hedge fund in the world, or money managers, they got like $4 trillion under management, has said that U.S. stocks deserve their higher premium. Yes, I remember what they said back in October of 2007. Anyway, remember, that's their business, folks. They have skin in the game, so what they say is not exactly what they mean sometimes. Let's take a look here at the overall psychology of the market. This was sent to us by one of our denners here at Tiger TV. One of the folks that's in the den sent us this, and it's a really interesting one. This crop, I believe it's a supply-demand report along with crop conditions. I believe it's more supply-demand. I'm not a fundamentalist. I rely on Rich Anderson and Cy Monley, for what their feedback is, and they pay a fortune for these services, giving them, ideas of where the drones are flying around and all that stuff. But, I'm just looking at the prices, guys. That's all I understand. So if you're asking any more, it's beyond my pay grade. Let's take a break, pay a few bills, and we'll come back, and I want to just talk about
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, before we talk about this chart that one of our dentists sent to us about the psychology behind the market, I wanted to talk just a little bit about this December wheat again, because this encompasses all the things that we look at when we're following pattern recognition. Remember, this has nothing to do with the crop report or fundamentals. This is just a sum total of all the buyers and sellers, over the past year and what's been going on. And you can see the ABCD structures on some of these is quite interesting. Look at the high up there at 462. You had a beautiful 3-drive pattern. Stopped, made a double top actually, and then, went from 462. It's dropped over 30 cents a bushel, which is not very much for wheat. It's been a very, very quiet market in wheat, corn, and beans. They've been in a really tight consolidation, which from my perspective, that seems like a bullish thing long term. But look at this Christmas wheat on a 4-hour chart. At the big ABCD that you can see comes down to around the 428, 429 level. And then you can see the smaller ABCD that comes down to the 429 level. Now, I call this a fishing expedition because when you go into a crop report, the liquidity really dries up at the time of the report. And then afterwards, of course, it's like the other markets, they go absolutely crazy. But I'm fishing for a bottom down there because of the double ABCD patterns. And what I would do is I would have to risk about 10 cents on this, and we haven't had a 10-cent move in this since, way back when Hector was a pup. That was more than a month ago. So the volatility is really drying up in the wheat market, much like we're seeing, in the stock market. So it's going to be really interesting to watch this. We'll follow this, of course, on Friday. Tomorrow's show will be before the crop report, and then I believe right after the show, an hour after the show, the crop report comes out, and then you have a better idea of what's going on. But write this down on your little memory sheet here, what's going to happen here, because we'll review this on Friday morning to see whether we were right or wrong and what actually happened. But this is Mother God and country stuff. You've got a 3-drive pattern there. You just got a lot of support, beautiful patterns, ABCD structures, and those are the ones that you really like to see. Now I want to get here. Hold on here 1 second here. I don't even think you have to risk that much in the gold, Mr. Z. If it gets above that 12. 97, I think it's going to take off. I would, if it gets above 1297 and you bought it at 1293, I'd put your stop at break even. Let's take a look at this chart that was forwarded to us by one of the dinners, and I wanted to give you an idea of what this is. This is basically the psychology and market emotion cycle. As euphoria, as we've said many times, market greed. Tops are harder to find than bottoms. The reason why bottoms, fear is an emotion that you can actually see. You can actually see dilated pupils, sweating. It's just hyperventilating. All this stuff happens near the bottoms, but near the tops, it's there it is. How smart I am, and then all that other stuff. But but you don't know when the days are. All I'm saying is that we're looking at something that has the characteristics of this, and we're seeing in the fact that there's just no volatility in the market. No one really cares, and that's the bottom line. If we look at the New York Stock Exchange Index, and this is up to date as of yesterday. You'll notice, one second here, if I can, all of my frustrations in this business come from computers, boys and girls. You'll notice here that we've completed the big ABCD pattern, and that's what we're looking at as far as the market getting ready to really go a lot higher. But we'll have to wait and see. What you don't see here that I think is where is it? Wow. Oh, you don't even see. The chart doesn't go back to November when we had that huge buy signal there on November the 7th, right at the election time. But this completes the big ABCD pattern up here in the New York Stock. We see the same thing in all of these. They're doing the same thing. We went higher, of course, in the NASDAQ, of course. The $6 trillion they have now? Are you kidding me? Wow, from $4 trillion to $6 trillion. Holy cow! We happen to have a family member that works for BlackRock, and that's 007 stuff. Anyway, let's move on here to one of these other charts that some folks have asked about, and then we'll see what we have moving here. Let me see. I wanted to cover this other one. Okay, here is the. This is the euro, because we've had several questions. The euro looks bullish, folks. There's just no other way to describe it. I mean, well, and that's why the gold is looking so good, and also the silver. They're running together, and you can see here we made that 3 drive to a bottom in the euro. We're now 150 pips higher than that bottom. We've taken out the 1.27 expansion of that last move. So if you see a 70-point pip retracement in the euro, it's probably going to be a buy. Keep an eye on that. That's the harmonic number for the euro. The pound is also acting, very, very bullish. This was expected because if we looked at the chart that we had coming into this week, it was real easy to see that we were setting right exactly, at a 61% retracement at that 130 and change, and now, we've moved a great deal higher. Well over 100 pips in the euro to see that this thing is actually, moving in that direction. So we'll see how it continues, but we'll go on from there. We're trading at 132 and change now, so we're 150 pips higher from where we were. Also this morning, if you follow crude oil made a 61% retracement of the last 5 days trading range up there at that 151.40 level. Sold off about $0.50, so it's not really doing very much. But keep an eye on that. That's another one that looks, quite interesting also. Now, I want to show you something that I think is a failure getting ready to happen. And let's just take a quick look at it. This would also reiterate the fact that we're looking at the situation for the market to get the dollar to go higher as opposed to lower. Let's look at this Canadian dollar here, folks. Now, this is not updated because if you remember yesterday, we were looking for that market to come down to the 24.80, and it hit it exactly. That was a 78% retracement of the last low, and all we were able to do last night and over the past 12 hours is to rally 40 pips. And now what we're doing is we're coming down and we're getting ready to take that out on the downside. That's a very bearish pattern, folks. This will be the first time since September the 7th where the market is getting ready to break one of those key fib points. And to me, that is a sign that maybe I believe that the trend is the trend is changing if that in fact happens. So watch this Canadian dollar. When we get back from the break, which will be here in a few seconds, I'll bring up the 4-hour chart on the Canadian dollar, and you can see what I'm talking about as how it's unfolded. And I hope that'll give you an idea of how we try to look at trend as we see these things, turning around. So this will be a really interesting one, to pay close attention to as we look. I will do the Australian dollar for you folks also, and that's pretty much what we'll do here in the next, when we come back from the break. We'll look at first the Canadian dollar, and then we will look at the Australian dollar, and then we will also look at the Japanese yen. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and all I have to do now is to find the Canadian dollar, the Japanese yen, on the Australian dollar, and we can talk about it. Let's do the Japanese yen first because it's the first one that jumps out at me. Let's just look here on this Japanese yen. You'll notice here we were looking. You see those really dark red lines, the one in March and April? That just means that we did exactly the same thing here recently. And you notice here that we're looking for a pullback here in this Japanese yen to come down to about the 109.80 level. I noticed there I said look for a 5-day correction to buy, where we're already 3 days into it, but it hasn't even backed off at all. So there's another one. If we get this thing above, 113.90, this thing could really have legs and go a great deal higher. But right now we're waiting for what we think is going to be a good retracement down, but we have to be a little patient with it. We've backed off well over 100 pips since last Thursday, but that's still not moving too much compared to to some of the other ones that we're paying attention to. I posted the Canadian dollar, but for some reason I cannot find the. Let's just do the old one here, and then I will bring up the other one as soon as I can find it. So give me 1 second here and see where we are. It'll only take, hopefully, what I'm doing is I'm looking at about 50 different charts on my desktop, and I line them up to be ready to go, yet when I start to look for them, they disappear on me. Let's do the next one is the, why is it that I can't find the Canadian dollar, and that's the one I want to talk about. I mean, it's got to be right in front of me, but I don't see it. Oh, well, let's move on to the next one here. Hold on a second here. Let's get this up here. And we'll be looking, hold on, at this is the one is the Australian dollar. We've had some questions about that. And there we go. Oh, hold on a second here. I've got a slight technical problem here. And there we go. You'll see here that we have a lot of support at that 77 level. We've only rallied about 70 pips on this Australian dollar, so I still believe we got a chance to get down to this 77.20 level in the Australian dollar. Now, I know a lot of you don't trade some of these currencies, but if you're going to trade currency, folks, and these things trade thousands of times more than stocks. I mean, you can't even compare the volume or the volatility. But you start out with the euro, the yen, the pound, the Canadian dollar, the Australian dollar, the Japanese yen is number 2, and then you can also do the Swiss franc, and if you want to do New Zealand, you can, but that has a little bit larger price spread because it's a little bit. So we'll see what's going on. Yes, we're talking about Santa Rosa. We have a very good friend up in that area, Peter Elides, and it's really important that, just a minute, just a second here. Hold on a second, and I'll be, okay, hold on a second here. And okay, let me move on here to 1 second here. I've got to put an order in, folks. I'm watching crude oil very closely here, and I've got a little profit in it, so I want to put my, just a second here. Bear with me here, folks. I'm sorry about this, but this is business. Okay, 1 second here. All right, let's move on here. No, Forex spreads killer. No, Cam, that's not true. The Forex spreads are not bad at all if you trade with someone that is, has large volume. In fact, if you trade at the Chicago Mercantile Exchange, Cam, you don't have to worry about the spreads because you can put your bid and offer right in there, and you're only paying a $4 commission in and out. That's $2 each side. So the spreads are nothing. They really are. The futures are clean as a whistle, and you don't have to, worry about any of that stuff. So that's a major thing to keep in mind. So that's the best way to trade. I said this before, so I should say it again because it's this important. If you're going to trade the futures and you're, a relatively small trader, go to the CME, Chicago Mercantile Exchange, because that's a bid and offer exchange. It's not a foreign exchange bank that they're taking both sides of the trade. So you can actually see the contracts being traded, what the bids and offers are. So you can put your bid in or your offer, and you'll get hit most of the time. And believe me, the spread there is like 1 pip, and 1 pip in the foreign exchange is 10 to 12.50, where you're only paying $4 in and out at the Merc. So it's a huge advantage. And not only that, it's regulated. So that's that's a big thing to to keep in mind. That's it. You know what I'm saying? So watch that foreign exchange. Oh, I have to do something. Since we're talking about that, I want to show you something, folks. This is get off the beaten path here a little bit, but I've got to show you this chart that my good friend John Jameson sent me. This, not many times do I get surprised, and believe me, this really surprised me. This is some of the things that that you look at here. This is this is one of his sheets that he measures on what that if you look at the far right corner over there, that means the trading day of the month. This happens to be the E-mini S&P, and it shows you the biases that you have for the 22 trading days of the month. Now you'll say, oh, well, this is really interesting. But boys and girls, listen to this. The research that he did on this, he started with 10 years. That's 2,500 samples, right? Then he went back all the way to 1982 when they started, and that brought in 17,000 samples. I think that's what it was. But it basically shows a couple of different things. One is the importance of the opening range that we have between 9 o'clock and 10 to 10:30 in the morning. And that 10:30, of course, is, Fed time that Shane Smolian is always worried about it. And then if you look at which are the best days of the month, best days of the week or best days of the month to trade, all of that is statistically lined up. And he's doing it also for the euro. So that's what we're going to be covering when we do the webinar next Monday next Tuesday on the 17th. Try to listen to it because it's really interesting, folks. About the only thing that keeps my interest is either the Blue Bloods or Major League Baseball when we're in the World Series. But this is really exciting stuff. So I hope you get a chance to listen to it because it will help you. There's no question about it. It's I was shocked when he told me which was the best trading day of the week. And it's really powerful there. He's going to show all of the formulas and all the stuff that's there. You'll be able to see it. And like Twentyman says, defy human nature, do the work yourself. But he'll show you the formulas and stuff. John's passion, of course, is Renaissance art, but he's also really big in. He does sports and political betting. Like he bet on Brexit, and he bet on Trump and a few others that he's done. But he looks at it mathematically. It has nothing to do with what's going on in the news. It's the probabilities of what the betting lines are and whether they get out of line or not. And that's what's really exciting because it's about that simple math. And you're going to like this. I mean, I loved it, and I've seen it 3 times. 877-927-6648. We'll get back to the Canadian dollar, hopefully.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I posted the chart of the Canadian dollar on an hourly basis so you can see a 4-hour chart. You can see what's happened since September the 11th. This is the first time that we're really breaking below possible support here at this 124.80 level. We're trading at 124.94, but the key part is we hit this level yesterday, and we could only rally 30 pips over a period of about 5 or 6 hours. That's not bullish, folks, especially if we get below the 24.80 level. That would be the sign that we've made the largest correction that we've had since September 5th, and we're breaking the first fib retracement number at 786 that we broke since that hasn't broken since September the 7th. And that's what I try to look at as determining what trend is, because if you have lower tops and lower bottoms, that means you're in a downtrend. And on a short-term basis, looking at this 4-hour chart, that would be a lower top and lower bottom. So watch this key level in the the Canadian dollar 124.80, because if that breaks, it sets up a pretty substantial correction down at least to the 382, which is down around the 122 and change level. So we'll follow this one also as we move on. Through the trading day tomorrow, of course, and Friday, but, we're almost finished for today, so probably nothing will happen, till that time. Let's take a look here at the crude oil market, because here's another one that has just made a 61% retracement. It hasn't backed off very much. We got up to the exact number, which was 51.40. The high was 51.42. We're trading at 50.97 right now. And that's had a pretty good, run from 49 to 51 to 50.45. We rallied $2.50 over a 5-day period. And whether we stop at this exact 61% or not is not clear yet, because you really don't have any ABCD structure to help you verify. So you're only dealing with one number, a retracement number at the 61% retracement. If you remember that cattle chart that we looked at, we had 5 different things that said that cattle is going to, or it should have, really strong resistance at this 119 and change level. So you're looking for multiple numbers to come together. That's the key, at least from a technical and pattern recognition perspective, is what we'd like to see. So that's what we're watching. Someone's asked a question about the gold. All gold has done so far today is just make a 61% retracement of the high we made at that 1297, which was the exact number that we had calculated, by using that $34 harmonic. The low was at 1263. You add $34. That takes you to 1297. But at 1297, you were sitting at an exact 61% retracement, and you were also sitting at a beautiful 1.618 expansion of that previous swing that took us into the down leg. We've already done that, so we really don't have to review that at all. So keep an eye on this Canadian dollar. So far, it's held the 124.80 again. We're trading at 125 right now, but that's what it's looking at, so far. Now the crop report comes out at 10 o'clock in the morning Eastern Central Daylight Time tomorrow. That's 11 o'clock Eastern, of course, and that'll be at 8 o'clock in the morning on the Pacific Coast. But this is going to be an interesting one because of the fact that it's a big supply-demand one that is interesting. Now, I wanted to bring your attention to this chart that we started the week with, which was Bitcoin, and believe me, it's getting so much press. It's almost like Apple. Well, nothing's like Apple. They get the greatest press from anybody. But if you take a look at this Bitcoin here, we had a lot of resistance at that $4,600. Folks, as soon as it went above $4,700, that told you that this pattern was no longer good. You had a whole lot of things, three different things saying it should stop right at 4,600. It did not, and it's now trading near the old highs now. It's up around 4,900 this morning. So when these things break to the upside, that you just can't. You can't catch a falling knife. You'll just cut yourself. Wait till the knife sticks in the ground and then pick it up. And this is a place where you've got to, try it a few times to see if you're going to be right. Now, long term, you could make a case very easily for $7,500 Bitcoin. I know you might think that's silly, but really you could, because the low when we made at $3,000, if you remember a couple of weeks ago, that was nothing more than a 382. And, that's something that is very important, because if that's the case, it shows that it's going to double. And that would take it up to pretty close to $8,000. And believe me, you're dealing with paper and numbers. So, there's no, they're not manufacturing these things on a machine somewhere. So you could easily do it. Remember, the tulip bulbs got to $25,000 for a bulb back in 1670 or 1680, whatever it was. And of course, they went back to $1, but that's neither here nor there. So we'll watch it. In the tulip bulbs, back in that era, $25,000 would have bought you about 4 homes, 4 nice homes to live in. But whether we get that same thing in Bitcoin, I really don't know. So we'll see what's going on. Okay, now someone asked a question about the dollar index. This is something that we've been talking about as of last week, and we talked about this Monday. You'll notice that after we made that bottom, this is a weekly chart, so we made a bottom 5 weeks ago at that 50% and 382 level, and we had a very, very minor rally. Went from 90 and change to 94, 4 points. And if you go back to early 2017, you'll see right before it broke to the downside, what did we do? We had another 4-point rally that stopped right at the 102. It went from 98 to 102 back in January of 2017, and then it came out unglued. Now, that means if this is the case, and this dollar now takes out the 9,100 level, folks, you'd be looking at somewhere around, 85 in the dollar index, and that's not unusual. So these markets are really, really starting to pick up in the foreign exchange, and you got to pay attention to them, because that's where the real money is. As it's moving. One of the things that John Jameson is going to cover on Tuesday is how the importance of this London market, which is the home of Forex, how important it is to the euro, and how to use, the opening price in both the S&P and in the euro to your advantage, because it's really, really good. The reason why he does all these statistics is because when he first started studying with me 15 years ago, he got infatuated with these harmonic numbers, and he statistically looks at every market. What is the average move? What time of the day does it happen? What day of the week does it happen? Which days of the month are the best days to trade? I mean, he puts this all statistically out, and it really adds to the advantage. Much like what they do in baseball. Baseball is all about statistics. They know when a left-hand batter is facing a certain right-hand batter in a certain ballpark, and whether it's raining or whether it's a day game or a night game. All of these statistics are there to try to put their odds in the favor. If you want to see a good movie about that, watch Moneyball with Brad Pitt. And it's a really great movie. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to wind up the show here, and we're going to do it with the wheat because we're really close. We're trading at 431 now in the Christmas wheat, and as you can see here, we have that multiple ABCD patterns coming here around 429, 428. It's before the crop report, but these are patterns, so you don't have the the luxury of working through a report. So just keep an eye on this because this is a very interesting pattern. It has all the things that you like to see. Of course, it doesn't have any of the fundamental stuff because it's all technical, but keep an eye on this. And remember, when they fail, it's no big deal. You just have to go out into the pond and find a new frog. That's all you have to do. And you got to kiss a lot of frogs before you find the princess. So watch this wheat very, very closely. It's going to be interesting how it holds up in this area. And then also we'll be following the cattle because that's another one in the commodity. And of course, we'll be watching the Canadian dollar very closely. That's another one. And then, of course, the gold and the silver. Gold and silver got to get out of here now because we've been at this level for quite some time. And if it's going to start to move, it should start to move higher because this could have been, distribution up here. It doesn't necessarily mean it was consolidation. So make sure that it's interesting here to see what's going to happen, and we'll go from that. We'll go from that level. So just keep an eye on that wheat. Keep an eye on the cattle. And keep an eye on that Canadian dollar. That's also one that looks very, very interesting. And we'll be looking to bring our guests in next week. We're going to have probably Bill Meridian and also Stan Harley from Stan Harley Stock Market Cycles. And Bill, of course, is Cycles Research out of Vienna, Austria. And we'll see what's going on. And another thing is, if you get a chance to listen to Tuesday's webinar with John Jameson, you really should do it. I mean, you don't get to listen to people like that very often. Trust me on that one, boys and girls. That is a flat-out no-brainer. Okay, that's it. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.